Welcome back to take a look at the link charts. Now, just after looking at the, check out the end of the Ethereum video for me chatting about the Bitcoin monthly chart. Because I looked at the Bitcoin monthly chart there, coming to an end of the month, might as well hide all the information off here. You can see that the monthly chart here, we've just been consolidating over the period of the last 3 months essentially, which we kind of know. And although there's been a hell of a lot of trading to be had in between times, but we know that that's the case. And overall, we've got an overall upward monthly trend. That's really great. We've come in here and we've set in a higher low. That's great. We've not got a higher high in the monthly, but that's fine for this month. Like contrary to the Bitcoin and the Ethereum cases, where you can see that there's sort of more of a downward trend overall, or on Bitcoin, and a consolidation trend on the monthly on Ethereum, as I think ties in with how we can look at how we feel about the coins overall. What we have here is an overall monthly upward trend, and we're not setting at a higher high on this month, and that's just not happening. Whatever, but it's still overall fairly bullish on the monthly. Let's go down to the weekly, which we spent so much time looking at recently, and revisit this and say, look, we didn't get that high over there. Since then, you can see the effect on the monthly candles quite easily. We've just come down, back down again, looking at getting towards the retracement point on that there, where you could see is a realistic retracement. If you go up here, oh god, I already have them on there. Oh, what a mess. But it's the 50% retrace that you're looking at there. You can tell just by looking with your eyeballs at the candles. Going down again then to the 24-hour time frame, what do we see having happened with this rolling over here and coming down and touching off the 50 simple and being supported by it? There's no sort of divergence here jumping at us to say we can see a turnaround. It's not really trending, just in the way that this wasn't really trending when it was going up. It's just going there, and that's just that. So overall, we have to look at the bigger picture stuff for divergence and whatever. And we can say in this sort of oscillating move here that there was a high over here on the stochastics during this price action. It was lower than this over here, so that's divergence, bearishly divergent. You can see that was and during this sideways movement, which is the stochastics is slightly better for looking at than the other ones if you've got a leaning towards one or the other. You can also see the MACD was very much divergent between those 2 points as well, and the RSI, well, it was actually also divergent really as well between those 2 points. So we knew that between these two highs here that there could be a bit of a rollover in terms of the prices and whatnot. And what have we had then happen in terms of the price action? Like we said, down at the 50 simple, we've come down to the 50% retrace area of our hypothetical. It was just only a few days ago Fibonacci retracement that we had on there, speculative, and of course then that's been very good for us. We saw a turnaround at the 382 like we could have thought we expected to have happen. That was good for trading in around those areas. Back up here to where we had our line and whatnot, back down again to the 55 and on down below to the 50% retrace area. And what we're looking at now, we've actually come down to where the 382 is here on the bigger Fibonacci retracement area, and the 50 simple, and the 50 simple kind of sums it up for us here. Just looking at this on the price action, we've had this effect happen, and there is the psychological impact when you come back down to areas that you've been at before. If you come down further than them, where you're breaking past lows previously. I mean, this is the fundamental basis of the Adam and Eve, the Eve and Adam, the head and shoulders, and every other pattern really in the book. So if you're going down below that area, bad news. But and as well with the I don't want to see that happening overall, but there's still sort of room down at 40,000. You could cope with it technically, but it's been crap. Really, we've talking about potential for shorting this all the way from since up here all the way down to here, and that's just the way that it's panned out. Could we see a turnaround to coming in at the 618 retracement area at that 40,000 area where we could, as we're discussing that just there now? Yeah, we could, and I think that would have to be where I'd be looking for that. Otherwise, we're going down for 786, potentially asking the questions at those points about whether or not we're going to be setting in a higher low or a lower high, if this is going to be sideways consolidation, which is grotesque and across a big period of time, or if we're going to see a turnaround. Ideally, of course, we see a turnaround here, and we don't have to, at the 382 in this Fibonacci retracement from those previous highs and lows, and then turn around and going up there towards the top side, and just trending towards the upper side here in terms of the overall move that we've had. If we go up to the 2-day and whatnot, or the weekly time frame, for instance, and say we're just kind of this is part of the upward movement, and we want to go up above. So until such times as you see the prices open and close in a weekly above 50,000, I'm not going to get particularly bullish in the long run. Until you see prices open and close weeklies below 30,000, 33,000, then I'm not going to get particularly bearish. And I have to admit, there's just lots of trading to be had in the meantime in between here as part of this consolidation area. And that's all we're really looking at. Look over at the dollar prices. Now, of course, we know that because the Bitcoin prices went up, the link Bitcoin prices obviously suffered as a result of that, which is fairly predictable overall. Not predictable, but you know, you could anticipate it. And what have we got here on this is the weekly. Go down to 24-hour, where that probably fit in. You know, whatever you have this overall. You know, you could say it's a sort of channel area, right? You could say that. You know, in which case you could swing up to sort of 435 and then down again thereafter to 383. You know, you could do all of that. You could say that it is more of some sort of wedge type thing on the go at the minute, or whatever, using like this wicks and bodies and whatever to come down and get them to converge, the lines to converge and bring this down a wee bit, and you know, and they converge more. In which case, you know, you could just be looking at this just in and of itself as a rising wedge, which has a typically bearish breakout pattern, you know, towards the downside, and you could look towards a measured move down towards where we see these things happening at the minute. And of course, the 50 and the 200 are still heading towards each other. Movement down like this would almost certainly seal their fate, and they would cross towards the downside. Remaining in this area will make it so that they either kiss or uncross fairly rapidly thereafterwards, because we're moving into May now, and that means we start to discount this big candle over here and add on other candles, and that could pull it around. It's right at that area. A lot of questions being asked. A lot of people would be trading around this concept currently of the 50 simple and 200 simple crossing on the 24-hour for that death cross. And I think whether you're positive or you're bullish or bearish on this, it would be worthwhile over the next couple of weeks anyway, for sure, looking towards these two moving averages and saying, will we retest either of them, as we have done, as you do tend to after crosses, even if it takes, you know, for instance, this cross happened on the 8th of February, back over here on the 26th of February, you talk about a couple of weeks there almost, and then you got a touch of the 50 simple, you know, so be bearing in mind for that, looking out for that, and that's if that's a wedge, you know. And then if we break it to the downside, you break it to the upside and whatever, you could be looking at our previous highs and whatever else, and I think that speaks for itself more or less enough. And if you were to call this just a pennant, and you're doing it from the lows up to that area, and that was your breakout, well then, hey, you could be coming all the way back down to the 236 down there at $2.30, or indeed you could be going up to make those highs. Like I say, though, it speaks for itself, and we can just look towards that time as it's happening. Overall, that's what I'm looking for. Is there divergence to be seen? Well, we're consolidating really overall, but there is a slight upward trend here that you could look to, in which case you could say that it's actually bearishly divergent across the oscillators down below, and you could maybe realistically look down to retesting of this area, say 21, where we've got this horizontal line at 324 and where that node's coming in. I'm not a financial advisor, none of this has been financial advice. Watch all the episodes today, hit the Discord link down below, join the discussion there, join me on Twitter at Rocky_Outcrop, join me in the comments here on Facebook as well, because I read them all and like them all. It's all great, thanks so much, and share this video with a friend if you've got one that I think would like it. I hope I brought some clarity. I know that it's been a little bit of a sort of muddy, cloudy episode, in a sense that I'm just talking about really, you know, you could really be really Johnny on the fence with this one, and I think, you know, there's a few different things to look at. If I have a slight leaning at all, I suppose if I had a slight bias at all, that I'm trying to overcome when I talk about these things and look towards the upper side targets, it would have to be this bearish one currently, given the price action recently overall. But, you know, it's not particularly hard to overcome those things should we see the price action go up to $4.29, in which case, you know, you're breaking up past that 786 retracement, which is also this other one over here, and we could look towards that quite easily. And I want to see that happen at, you know, $4.44, all the fours. That would be good, and then I could get getting positive again. It's not a million miles away from where we are just now, but overall this doesn't feel super fantastic, and we've come back down to, you know, we're still within this, you know, still what's going on. And in terms of the monthly, heck, I'm more or less, you know, bullish on this thing with our previous highs or higher lows coming in, and we're just on the way up in terms of the monthly of doing that. Likewise with the weekly and whatever, you know, there is this area, but I would, like I said before as well, you know, consider the potential for a pennant type thing happening and us testing off these areas down below. I would consider that potential for it to happen. And of course, if we go up to here and towards the top side, $5 would be an easy touch target off of these things. So it'll shake itself out in time. Thanks so much for tuning in, and I'll catch you in the next episode.